Hello guys, welcome to RBI Academy and a very good evening to all of you. So first of all, there is a student in our Telegram group who was selected for SEBI exam. Now he has informed that there might be basically he said that there will be a notification for SEBI Grade A in November. Okay, so yeah, this is the information as you can see in our Telegram group about your exam for SEBI Grade A, and also you know very well that other coaching institutes have been informing about the PFRDA Grade A exam that can be for that notification can come in the end of the month of this particular month, that is August, right? So if you have not started your preparation, at least start your preparation, because whenever there are talks about the notification, might be there is a delay in 1 or 2 months related to the notification, but definitely the notification comes. Okay, so yes, I will seriously ask you to prepare for your exams. Also, if you are having any kind of doubt, you can ask us, and people who are planning to purchase any courses from RP Academy, I will suggest you to wait till 2 days. Okay, basically either tomorrow or day after tomorrow we will be providing you an Independence Day offer, so you will get at discounted prices all the courses. Okay, so if you are planning for the test series, MCQs or whatever you want to purchase, you can just go and visit the website. This is not an promotion for the basically to purchase the course, but I have told you all the information that is available, and rest it is your wish. You know, I never pressurize people to purchase any courses or something. Okay, now let's begin with our session without any delay. So today we are going to talk about chapter 9. Chapter 8 we have already completed, in which we are going to talk about account of companies. Now this is an additional chapter. Usually you will see that okay, this is not directly quoted in your syllabus, but of course there are so many chapters. For example, the first chapter, okay, that is never asked in your syllabus, but it is asked in the exam. So we have to prepare certain chapters, and this is one of those chapters. So here we are going to talk about some different things, right? We are going to talk about a book of accounts. So now let us forget the legal wording for a moment. Now imagine you are running a company with 100 CRs of transaction. Okay, there are transactions that are taking place and they are worth or above 100 crores every year. Now one day someone asks, show me where the 100 crore rupees came from, where did it went, and what the company owns and what company owes to other people, basically the credits that company had taken, and how you calculate your profit. So you can't answer that I think it's somewhere in my laptop. No, that's why there is an existence of your section 128. So what does section 128 talk about? It talks about basically that a company must maintain a reliable, okay, it must maintain a reliable financial trail. What is a trail meaning? That if want to check the transactions after 10 years, then also the legitimate data is provided to me. Okay, so a reliable financial trail of everything it does. Think of it just like a bank's transaction record. So a bank can't operate on memory. Every deposit, withdrawal, loan, interest, entry, etc. has to leave a proper record, right? So where should the books be kept? So here the normal rules are different, where they say that fine, the company's book of accounts should be kept at its registered office. Okay, but here, because we are studying about what? We are talking about your section 128. So you have to remember one more thing. So here, first of all, imagine there is a company. We were taking the example of ABC Limited, right? It has its own registered office, let us say in Delhi. So here that will become the default location for what? For its book of account. Fine. Other than that, other relevant papers and financial statements. Now here you will also see few things. So for example, can the company keep them somewhere else? So here you will see yes, the board can decide to keep or some books at some other place, okay, at another location. Fine. Now what will happen? Here you will see that company must inform the registrar of companies, and where there we have to fill form AOC 5. Okay, this is the form name that you have to file, and within how many days? Of course within 7 days from the BOD's decision. Okay, so every company shall prepare and keep at its registered office book of account, other relevant books, papers and financial statement for each year. Okay, every year. Now, if you are keeping it at an alternative location, you must keep at another place in India. Okay, as the board decides, provided a notice form OAOC 5 is filled with the ROC within 7 days of the boards of directors decision. Accounting basis, the books must be kept on an accrual basis, not on cash basis. You remember the accrual basis, that once you have seen you have all the expenses or the income have been occurred, meaning you may not have received the cash, but still you are going to record it in your book, and according to the double entry system, that is debit as well as the credit part, giving a true and fair view of affairs. Now, branch office records. What do we talk about branch office records? So here we are saying that, okay, first of all, we have to make all the systems according to accrual and double entry system, but also we are saying that suppose ABC Limited has branches in Delhi, Mumbai, Singapore, so the branch books must be maintained at the branch itself. Okay, and here summarized returns must be sent periodically, at least quarterly, to whom? To the registered office, and returns are sent to the registered office or principal place of business in India. Fine. So the branch books can be maintained at the branch itself, that's practical, but the main office still needs to know what is happening. So the branch has to send summarized returns to the registered office, principal place, either basically either registered office or your principal place of business in India, and these returns must be sent at least once every quarter. So branch to summarize financial information to head office. Fine. Now, I gave you this example where I said that ABC Limited had branches in Delhi, Mumbai, also I said Singapore. Did I just say it for the sake of saying? No. I meant something here. What did I mean? I wanted to tell you that here, suppose basically the broad principle will be same, that okay, ABC Limited has a branch in Singapore, the detailed books can remain there, but the Indian office must receive the required summarized information. And also there is an important point. What is the important point here? It is related to the director. And what is the point here? We are saying that fine, if a director wants to inspect the overseas branch, its detailed non-summarized records, then he can ask to make a formal written request. So basically he can ask the same after making a final written request. So here, book of accounts and other papers kept by the company shall be open for inspection by any other director during business hours, and under section 128 clause 4, officers and employees must give all reasonable assistance to a director making an inspection. Now let's talk about overall overseas financial information. So it must be maintained outside India. Seeking detailed non-summarized records from an overseas branch requires a formal written request by the director. Now, what is the mandatory retention period? So here we are saying that okay, we have given the directors some inspection rights, and they have to follow the section 128 clause 4 here. But also we are saying something different too. Here we are talking about preservation rule. So we are saying that the company must preserve book of accounts and vouchers, okay, for 8 years. So 8 financial years. Fine. This is the time period. Why? Because an issue discovered today may relate to a transaction from several years ago. Fine. We have discovered an issue meaning a problem here, okay, not the share issues, right? So here we are saying that okay, the issue was discovered today, but the problem had started occurring from last, let us say, 5 years or 6 years. So we must at least have the reserved data or book of records so that we can check them, right? Also we are talking about the investigation, where we will see that this period can be extended if there is some kind of investigation is going on or investigation is ordered here. Then the central government can require the company to preserve the book for an even longer period. Okay, so it's 8 years and it can be even potentially longer period if the investigation is going on. Now tell me, who is responsible if the company fails? So here we are saying that persons responsible and the punishment, what will be there? So the law doesn't blame some imaginary company accounting department, it identifies the responsible people. So depending upon the circumstances, responsibility can fall on whom? First of all the MD, then whole time directors, other than who? here CFO and any other person authorized by the board of directors. And while I am talking about whole time director, you have to remember we are talking about the director who is in charge of finance. Okay, so basically someone must actually be accountable for maintaining the proper books. Here we are not taking the accountable the artificial person, rather we are talking about the natural persons responsible, right? Now, natural persons, individuals, you and me, artificial person, company. So, subject to a fine which shall not be less than 50,000 rupees, but which may extend to 5 lakh rupees, 50 lakh rupees for failing to maintain proper books. So, here we are saying that if there is a default, the punishment here can be 50,000 rupees, minimum fine, maximum 50 lakh rupees fine. So, this is that's it about your section 128. Now we will move towards which section? We will move towards section 129, where we are talking about the financial statement. So now this is very important section. This has been asked in the exam this time also. So you must remember, although I had covered this in the commerce and accountancy lectures, but of course we are studying Companies Act, and I told you that chapter 9 they are asking these days, so you have to know things, right? So what we are saying? We are saying that let's imagine that you are thinking to invest, or you are here planning to invest 55 lakh rupees in a company, but you want to know that how is this particular company doing. So 129 will be telling you that okay, we are not just going to show you numbers, rather we are going to show you a financial picture, right? So the picture will be giving you a true and fair view of the organization that can be that is properly prepared, comparable as well as reasonably truthful. So what must be a financial statement to look like? So you remember the words true and fair view, right? So here first of all we are talking about what? We are saying that the financial statement should give an honest picture of the company's financial position and performance. Also here we have an important schedule. You remember the schedule 3? So in the schedule 3, what do we say? We say here that the financial statements must follow the prescribed format under schedule 3, which is a standard template. Okay, so here we have to make sure that the reports that we are preparing are comparable, right? I can compare today's report with this year's report with the last year or another year's report, or quarterly I can check it, or I can simply compare it with other companies in the same industry. So it must be comparable in nature, right? So it governs the presentation of financial statement, ensuring they provide a true and fair view of the company's state of affairs, aligning with the accounting standards, and it must have a true and fair view, right? It must be honest. Then compliance must strictly compliance with the accounting standards notified under the section 133. Then it must be prepared in the exact form and format provided in schedule 3. Fine. So here I hope this part is clear to you. Now we are saying that okay, there are some common rules for preparing financial numbers that you have to follow. Also, who will see these financial statements? So imagine the company shareholders are sitting in the annual general meeting. Now board has to place the financial statement before the company at every annual general meeting. So when the financial year ends, financial statements will be prepared. Board will place them before the AGM and shareholders will get to see them. Okay. So at the every AGM, BOD shall lay before the company the financial statements for that financial year. Clear? Hopefully this part is clear to you. So here we are talking about consolidated financial statement. So here you have to understand one simple concept too, that consider there are two companies, ABC Limited, that's a parent company. Also it has a subsidiary company XYZ Limited. Fine. Now we say that you are looking only at ABC Limited's individual account. Okay, you are not looking at what? XYZ's account, which is a subsidiary company. So here you may think that okay, ABC is doing great, but perhaps ABC subsidiary has huge debt, major losses, significant assets, major business operations. So if you look at the parent company's number, you may miss the bigger picture. And what is the bigger picture here? Consolidated financial statement, where we are saying that where a company has one or more subsidiaries, associates, or joint ventures, it has to prepare a consolidated financial statement, right? Now, here you have heard about two words, standalone versus consolidated. Now you see the report will be prepared for consolidated, okay, standalone means individual. Now consider ABC Limited is involved in a business that is completely different from what business our XYZ is doing, okay, there is one business activity. So it can prepare a standalone statement as well when it comes to the banking companies especially, okay. Now you have to understand that we have to first of all make what? We have to make a consolidated financial statement. Also we can see this as standalone statements for both, but CFS will give you a broader picture of the group after making the accounting adjustment required for the consolidation. Fine. So here a consolidated financial statement in addition to the standalone statements also provide provisions regarding preparation, adoption and audit apply mutatis mutandis to the CFS, okay. So we have to make sure that here whenever an investor is trying to understand things, so he should not automatically assume that okay, standalone profit is the entire business group's performance. Now what is this form AOC1? See, here we say that okay, if a company has subsidiaries or let us say joint ventures or let us say associates, then it has to also file form AOC1. So what is this form that we have to attach? Here we are seeing that it contains important salient financial information relating to those entities. So here a quick information sheet is there about the company's other important business relationship, okay. So here must attach a separate statement containing the salient features of the financial statement of subsidiaries and associates. Deviation from accounting standards must be explicitly disclosed. So here now we have one simple rule that consider that you are not following accounting standards, okay. The accounting standards or the prescribed formats are not followed, so you have to inform that why you had not followed, what is the financial impact and how you are going to record the same. So must state the deviation, reason for it and the financial impact, okay, arising out of such a deviation. Understood? Also you heard one term here, mutatis mutandis, this one where it is, yeah. So here you will see that what is this? It talks about see, it says simply that apply the same rules with the necessary changes. So the rules applicable to standalone financial statements regarding preparation, adoption and audit also apply to CFS with the necessary modification. So if the company has to prepare its own financial statements properly, it cannot suddenly say that okay, for the consolidated version we will be casual. No, you cannot be casual in that scenario, okay. Understood? And this deviation part also I hope you have understood that why we are taking all those things. So we have to make sure that all the information is provided here. Next, exemptions and penalties. So we are talking about CG exemption. What is CG? Central government, okay. So we are saying that central government can provide exemptions, okay, meaning it has the power subject to the provisions to exempt certain class or classes of companies from complying this section 129 requirements, okay. Also we are saying that what will happen if the company defaults by itself? So responsibility can fall on whom? MD, whole time directors, other than who your CFO and any other person, right? So we are saying that the punishment mentioned will be how much? It is up to 1 year in your this company's act, also 50,000 to 5 lakh rupees or both, okay. Here the amount is 5 lakh rupees, okay. In the section 128 it was 50 lakh rupees, here it is 1 lakh 50 lakh rupees. Also we are talking about the imprisonment part, okay, jail. Now section 129 periodical financial results. So here we are going to talk about 129A. So see, we have two sections, 129A and 130. One talks about the period results and other talks about the reopening of accounts. So 129A says that don't wait until the year end. Some companies may need to show their financial performances periodically, okay. And section 130 says that if the old accounts are seriously unreliable, because of any fraud or mismanagement, they may have to be reopened, but only through a proper legal order. Fine. So imagine that there is ABC Limited. Okay. Now this ABC Limited has it has been a unlisted public company, and it prepares its annual financial statements, but that's only once a year. Now consider that they are having some kind of financial problem and they want to bring their IPO, or maybe here everyone has to wait until March next year to see the complete annual picture. No, of course not. So section 129A creates a mechanism under which central government may prescribe the classes of unlisted companies to report their financial performance periodically. Okay, understood? So it applies to whom? See, here you have to understand that it applies to such classes or class of unlisted public companies as may be prescribed. Okay, so here you will see that prepare periodical financial results at prescribed intervals and obtain board of directors approval and complete an audit or limited review of results and file a copy with ROC within 30 days of the completion of the relevant period. Meaning, see, here we are saying that okay, the central government may require the specified companies to do 4 things. First of all, prepare their financial results periodically, meaning they may have to prepare results at a prescribed interval, for example quarterly, half yearly, depending upon the applicable requirements, right? Then you have to get a board of directors approval, where we are saying that results are not just prepared for by some accountant and thrown into a file. They have to receive the required whose approval? BOD's approval, right? And also you have to make sure that all your financial statements or periodic results may have to undergo audit or limited review depending upon what is prescribed. Fine. So someone independent checks whether the numbers have been prepared properly or not, and a full audit may be a deeper examination, but a limited review is generally a narrower level of checking. Also, talking about registrar of companies, we are saying that once the relevant period is completed and required process is done, the company must file a copy with whom? Registrar of companies within the 30 days of the completion of the relevant period. Understood? Now let's understand that why 129A is important. Because suppose you are looking at an unlisted public company without periodic reporting, you may have a long information gap. So here we are saying that okay, you may have to bring out your information regularly. Now let's talk about section 130 that talks about reopening of accounts, where we are going to talk about some situations. Let us take an example again for ABC Limited, that it had prepared its account for the year 2022 to 2023. Fine. Now what happened? Everyone accepted them. Years later, evidence emerged that wait, these accounts have been deliberately manipulated. Okay, they are saying that these accounts have been deliberately manipulated by the, of course, senior management or someone like in the position, right? Perhaps the profits were artificially inflated, or we can say that perhaps the company's affairs were so badly mismanaged that the financial statements, okay, were here cannot, or financial statements cannot be trusted. So here, can the company's management simply open the old accounts and erase the numbers and prepare new ones? No. Here we are talking about that management cannot casually reopen these old accounts or recast these financial statements unless it is an order made by the court of competent jurisdiction, or here NCLT. Okay, so we are saying that reopening or recasting requires an order of a competent court or the National Company Law Tribunal. Fine, understood? Now, when can these accounts be reopened? See, first of all, you will see that if there is any kind of a fraud, so relevant earlier accounts were prepared in a fraudulent manner. Fine. So suppose the earlier accounts were prepared in a fraudulent manner. For example, their management deliberately created fake sales to make a 20 crore profit look like 50 crore rupees profit. So this is not merely an accounting mistake, that rather it is what? Fraudulent reporting. then here can be a ground 2, that is senior management's mismanagement. Okay, so affairs were mismanaged by whom? Of course the senior managers. So here we are saying that okay, there might be some serious mismanagement of the company's affairs, so where the circumstances create doubt about whether the financial statements can be relied upon or not. Okay, so something has gone so badly wrong in the way that company was run that the old financial statements may not be trustworthy. And here we are talking about who decides whether the account should be reopened. Either court or NCLT, not CFO, not auditor, board alone or shareholders, right? So the reopening also requires an appropriate legal offer. Fine. So NCLT must give notice to central government, income tax authority, SEBI, etc. before passing such an order, and the revised recast statement so under this section shall be final and considered as conclusive. So here we are seeing that okay, government and regulators must get a chance to speak. So before the court or NCLT passes the order, notice must be given to relevant authorities. For example, central government, income tax authority, SEBI, other concerned statutory regulatory bodies, and their representation have to be considered. Why? Because changing old accounts can affect taxes, investors, regulators, financial reporting or previously filed information. And once you have revised all your accounts under the section 130, they will become final and conclusive, meaning the company does not get to keep endlessly reopening the same accounts. Once it is done, it is done. Fine. And what is the time limitation on reopening? So here we are saying that 8 financial years. You remember under the section 129 also 128 we had seen that we have to preserve the accounts for 8 years mandatorily, and if there is any kind of inspection going on then we can extend the period. So here also we are saying that normally and under the section 130 you cannot reopen accounts beyond the 8 financial years immediately preceding the current financial year. So if the current financial year is 26-27, so here you will see that preceding 8 financial years, okay, you cannot basically go and beyond the past 8 years you cannot go and open the accounts. Okay, so here the important conceptual connection is with your section 128. Okay, understood? Now here you remember that there was an exception under the section 128(5) where central government can ask for potentially longer period. Remember that. So you have to keep in mind that as well while you are answering. So here there are two sections that you are going to connect, section 128 to clause 5 as well as section 130. So no order shall be made for reopening of the books of account for period exceeding 8 financial year immediately preceding the current financial year. Next, section 131, which talks about voluntary revisions. So here we are talking about correcting financial statements, and also we are going to talk about section 132 where we are going to talk about the auditing profession, that how we have to control it. So section 121 is asking you, what if company itself realizes its financial statements are wrong? Okay, so here as a student you were giving your exam and you realize that okay, I have made some mistake. You will go back and rectify within the time, otherwise you will not be allowed to do so, right? But here under the section 131 what is happening, there is a voluntary revision of financial statement of board's report, a board of directors report, right? So suppose ABC Limited has already prepared its financial statement. Now the directors are discovering that something in these financial statement does not comply with section 129. Also they say that our board's report does not comply with section 134. So the directors can seek to revise the state documents. Yes, but there is an important part. They cannot simply open the old file on their own computer and replace it. Here also you need an approval from NCLT. And while I am talking about the NCLT approval, here I am saying that the problem basically will be discovered first, then directors will decide that okay, revision is necessary, then they will apply to NCLT and NCLT will consider the matter. Only then you can file the revised financial statement of board's report. And here you have to remember one simple thing, that all these revisions can be done in any of the 3 preceding financial years of the current financial year. Okay, so from the current financial year preceding 3 financial years, beyond that you cannot go and revise the statement. So director must prepare revised financial statement or a revised board report if it appears that they do not comply with section 129 or 134. Here it was allowed for 3 preceding financial years from the current financial year. You require a formal application to and an order from NCLT. Detailed reasons for revision must be disclosed in the current board's report, that why you have revised all these reports, what was the issue. Okay, so why are we involving NCLT here? Because here you may correct the genuine non-compliance, but you may need a tribunal oversight. Otherwise what will happen, there might be some people who will misuse this particular clause. Fine. And government and income tax authorities are also getting notice here. So when the company applies for revision, NCLT will give notice to central government as well as your income tax authority. So here it will say that okay, and it will also consider their representation before making its order, because changing financial statements can affect taxation, government record, investors, other regulatory matters. So everyone who may be getting affected through this should get a chance to speak. Okay, understood? Also here you have to remember one thing, company cannot keep revising its financial statements repeatedly throughout the year. Not more than once in a financial year you can revise your statements. So okay, so under section 131(2), revised financial statements or reports shall not be made more than once in a single financial year. Okay, clear now? So the revision is confined to correcting the non-compliance and necessary consequential changes. Okay, so fix the actual problem, do not write the entire story again or rewrite the story. Fine. Now let us move towards section 132 that talks about National Financial Reporting Authority. So here we are saying that okay, the company's financial statements are there, people are responsible for accounting and auditing. So if there is a huge listed company that gets audited, the auditor says that okay, everything looks fine, but if the audit itself was poor, then who will check the auditor? So here comes the role of NAFRA, where it will be checking the auditor, auditing the auditor. Okay, so here we are saying that it was constituted on October 1st 2008. Fine. So here you will see that under section 132 we brought it, where what does this particular NFRA says? It says that okay, I have 3 main jobs. First of all, I will be recommending accounting and auditing standards, Also here I will monitor and enforce their compliance and check quality of professional services. Fine. Just like we check the quality of our goods, we are going to check the quality of professional services. So here you will see that NFRA makes recommendation to the central government regarding what? Accounting policies or accounting standards. Fine. Also we talk about auditing policies or standards. So then we talk about that are the people actually following those accounting policies or standards or not. So NFRA keep monitoring and enforce compliance with these accounting and auditing standards. It also oversee the quality of services connected with compliance with these standards. Okay, so here establishment of NFRA to provide for matters relating to accounting and auditing standards, where it is going to make recommendation to central government on formulation of accounting auditing policies, monitor and enforce that whether they are complying with these or not, then oversee the quality of service of accounting and auditing professionals. And what is the composition? See, here we have a chairperson who must be a person of eminence with expertise in areas like accountancy, auditing, or what? Of course your finance as well as law. And there must be at least, there must be at most 15 members. So these can include full-time and part-time members. So you have to understand this particular part. Okay, so we are talking about that there are total 16 members. One is chairperson and there are other 15 members. Okay, understood? Up to 15 members, or better say. So here we are saying that what are the investigatory powers of NAFRA, meaning whom can they invest? or whom they can invest. So here we are saying that who can NFRA investigate. So if it can investigate professional misconduct by auditors or professionals for prescribed classes of company, okay, and bodies corporate. So here you will see that there are listed companies whose securities are listed on what? Any stock exchanges, fine. So here we are saying that there must be either these listed companies or large unlisted companies. And while I'm saying large unlisted companies, the companies who have met the prescribed threshold, for example, the paid up capital of at least 500 CR, okay, and then we are talking about your annual turnover that must be at least 1000 crores, annual turnover that must be at least 1000 CR, or the companies whose aggregate outstanding loans, debentures or deposits, basically the liabilities, are of at least 50 CR, right? So aggregate loans, advances or deposits that company used to take from their depositors for their own purposes, okay. So power to investigate professionals misconduct for prescribed classes of companies. It holds exclusive jurisdiction, overriding bodies like ICAI. It possesses powers of a civil court, discovery of books, summoning persons under oath and inspecting registers. So fine. So here we are saying that NFRA has very strong investigation powers, where it has the power similar to those you would expect from a serious regulatory investigation. It can require or production or discovery of documents, summon people, examine people on oath, inspect relevant books or registers, right? Now also you heard the one simple line that NFRA has here what kind of powers? So it can have superriding or overriding bodies like ICAI. Fine. So here you will see that suppose NFRA has initiated an investigation into a matter within jurisdiction. Now another professional body such as ICAI cannot simultaneously start or continue the proceedings on the same matter, okay, understood? Now what if an auditor commits misconduct? So here we are saying that, okay, if let us say that they have received 10 lakh rupees as their audit fee, fine. Now what will happen? And he is found guilty of the professional misconduct, then the penalty framework will be depending upon whether we are dealing with the individual or in audit firm. So if it is an individual auditor, we may charge minimum 1 lakh rupees of penalty, which can extend up to the 5 times the fee received, that is 50 lakh rupees in this particular case, right? Or if it is, let us say, audit firm, then the minimum amount will be 5 lakh rupees, which can even extend to 10 times the fee received, that is 1 CR, fine. So you have to understand that also NFRA can prevent the person or firm from taking up specific audit engagements for how much time duration, from 6 months to 10 years. So they can debar the member or the firm, fine. So here you will see that they may say that, okay, you are temporarily prohibited from acting as an auditor for the specified period. Also, can this order be challenged or not? Yes, aggrieved person can appeal to the NCLAT, okay. So here if you feel that, okay, their orders are not right, so you can simply go to National Company Law Appellate Tribunal, fine. And NFRA's headquarters is in which city? It is in Delhi. So central government is prescribes accounting standards as recommended by ICAI after examination and recommendation by the NFRA. So here we are talking about which section? Section 133, where what we are saying here, we are saying that who is going to decide the rules of the game. And under section 134 we will also study about the accountability. So we are saying that suppose every company was allowed to decide its own accounting standard rules. So company A says that I can count profit this way, company B says that I can simply count the profits completely in a different manner, and C says that I don't count the expense at all. So here comparing these companies would be very difficult or almost impossible. So we talked about the common accounting rules, which are known as your accounting standards, which are recommended by ICAI, okay. and NFRA will examine or recommend as provided under the law, and central government will prescribe or notify these accounting standards. Understood? Now section 134. I think section 133 is very important yet very simple, right? We are talking about a common rule book, but under section 134 we are talking about financial statement and board's report, right? So here we are saying that it governs the approval, authentication and mandatory extensive disclosures required within the board's report attached to the financial statement. So what do we say here? So we are saying that BOD takes responsibility for approving what? Company's financial statement. So here we are saying that financial statements which include your consolidated financial statements, right, for the group companies, you remember. So where applicable must be approved by the board of directors before they are signed. First you have to approve them and only after that you can sign them. Fine. Now we are saying that if we have reviewed these financial statements and we are putting our authority behind them, then only they can be presented. So what are the signing rules? You have to understand first that financial statements are signed on or on behalf of the board. By whom? First of all, the chairperson, if he is authorized by the board of directors. Another person can be our 2 directors of the company. Now, while I am saying about 2 directors, I simply mean that if the company has a MD, it must be either 2 different directors or 1 director and 1 MD. Okay. So, one of those 2 directors must be the MD. So, additionally, if there is applicable CEO, if CEO is the director, or CFO or company secretary, if auditor appointed, must sign it. Okay. So, you have to remember simple rules. Financial statements must be approved by board before signing. Then it must be signed by chairperson if authorized, or 2 directors, out of which 1 must be an MD. Then it also can be signed by CEO if they are a director. It must be signed by a CFO or company secretary if we have appointed them. Okay. Now the auditor's report shall be securely attached to every financial statement. So here we are saying that auditor has independently examined the financial statement and issues an auditor's report. So under section 134, this report must be attached to every financial statement. Understood? Now, what are the mandatory disclosures? Basically, you have to make some information transparent which can change the economic decision of the board of directors or investors or other stakeholders. So, here there are some general disclosures. So, you have to remember that they say that we have to provide the annual returns, right? So, web link of annual return, number of board meetings, directors responsibility statement, also details of reported frauds if any, explanation for audit reservations and particulars of loss or investment. So basically here imagine you are a shareholder who is attending the annual general meeting. Now you say that okay fine, the revenue is 500 CR but the profit that you have shown is just 80 CR. Why there is such a big difference? Now you wanted to know that what has happened during this particular year. So BOD's report will also talk about the basically web link to the annual report. So annual report is what? A broader snapshot of the company's corporate information, and here the number of board meetings held during the year will also be informed. So because a board that is supposed to supervise, let us say 1,000 crore rupees company, should not operate like okay let us meet whenever we want to. Rather the number of meetings gives you some insight into governance activity. And talking about this director's responsibility statement, which we also call as DRS. Okay, so what is a DRS? Here we are saying that directors are essentially saying we take responsibility for how these financial statements were prepared. Fine. And we talk about the frauds reported by auditors. So if auditors have reported any fraud, under which section? Section 143(12) clause. Okay, so here we are saying that relevant details must be included, and it simply means if the auditor has reported certain fraud, shareholders should not be kept in the dark. And What did the auditor complain about? See, suppose the auditor report says that we have a qualification, or there is a serious reservation, or we have an adverse remark. Board cannot simply sign and ignore it, or simply ignore it. Board's report must provide the explanation, comments on every such reservation, qualification or adverse remark. Okay. Now, here you have to also understand this particular last term, that is particulars of loans or investments. So, suppose that the company has given some loans, guarantees or here investment, then board's report must provide the particulars of that as well under section 186, because if a company is using shareholders' money to lend large amount or invest heavily elsewhere, investors must know about the same. Also, here you will talk about your related party disclosures, for example, joint ventures, subsidiaries, associates, right? So, here suppose ABC Limited does a 50 crore transaction with a company that is owned by the company's director, fine, then also it will be calculated as what? Your related party transaction. So, here you will be asking that, okay, was the transaction fair? And that's why related party transactions under section 183(8) are disclosed under which form? Form AOC2. Okay. So, here you will see that what is the state of the company will also be informed in the board's report, where we are talking about the state of company's affairs and the amounts proposed or carried to reserve as applicable. Basically, how did the business perform and what happened to the profits. So, risk management policy implementation, formal annual evaluation of the board's performance. Here we are talking about fine, how is our board performing, how board of directors are performing, how is our management performing. Also, we will talk about the dividend recommended. Okay. So, here just a second. Yeah, here it is written. Yeah. So, here we are talking about the board's report should include dividend recommended. Basically, you have to understand that under the section 123, we had talked about the declaration of dividend, and now section 134 makes a dividend recommendation part of board's reporting a story. Okay. Also, here we are talking about if anything important happened during the year. Fine. So, annual evaluation we are making now. So, here you will see that, imagine on the 31st March, company was looking healthy, but on 15th May, a factory worth 200 crore rupees burns down. So, if the annual report is released after that, you would want to know that why is the board report covers material changes and commitments. Okay. So, occurring between what? End of the financial report and date of the report, that affects the financial position. Okay. So, end of the financial year was 31st March, but the fire broke down on 15th of May. So, you have to provide information regarding that fire as well. Okay. Also, the board reports must discuss development and implementation of risk management policy. Okay. So, different risks are faced by the organizations, for example, credit, market, operational risk. So, basically, you have to inform all those risks as well. And you would have heard about the CSR, right? So, here what we are saying? We are saying about talking about the board's report must include here corporate social responsibility policy as well as the initiatives. Okay. And what the company is doing towards the society or the environment from which it is extracting the resources. Fine. And here we are talking about the risk management policy. Now, director's responsibility statement, or better say DRS. So, here we are saying that we did not just sign these documents. So, here is what we did to ensure that they were properly prepared. Who is saying this? Of course, our directors. So, here we are talking about 6 major areas. Okay. First of all, let's talk about accounting standards. Here, the directors will state that applicable accounting standards were followed. If there was any kind of material departure, meaning a significant departure, fine, then proper explanation is required. Then accounting policies were also applied consistently. we had followed all the accounting policies, procedures. Instead of here calculating something every different year or making changes, we are not doing the same. We are rather what we are doing, we are using the same policies consistently over the years. Also, we are maintaining proper accounting records as well as we are protecting the assets, okay, or safeguarding the assets, right? So here what do we talk about? We are saying that directors have to state that proper care was taken to maintain accounting records and safeguard company's assets. And we are talking here about the going concern basis. What is the going concern basis? You remember that the companies will be succeeded by different people, right? Employees, people will come and go, but the company will remain. So here we are talking about what? We are saying that basically we are assuming that company will continue its operations forever, or better say for the infinite time. So here directors state that financial statements have been prepared on a going concern basis only. And here we also talk about internal financial controls as well as a compliance system. So for applicable listed companies, directors must state that proper internal financial statements were laid down and were operating effectively. Fine. So internal checks designed to prevent errors, fraud and misuse of company money. Also, you have to make sure that directors state that proper system was devised to ensure compliance with all applicable laws. Okay, clear? Also in the section 34 now there is a penalty. I think this part is skipped by me in the PPT, but it will be provided to you in the notes. It has been provided already in the notes, so no worries if you have missed it. I will just write it here. Okay, so here we are saying that if the company defaults, there will be a fine of 3 lakh rupees. Fine. Also here fine so officer in default, this will be a fine on whom? Company. And officer in default, oh my god, such a bad handwriting. Officer in default. I have a very bad handwriting, but when I write on this pen, through this pen, it becomes even worse. 50,000 rupees fine will be there. Okay, clear? We are not talking about any imprisonment or something here, but we are just saying that okay, fine, under section 134 we have to approve, sign, audit, disclose and take responsibility, right? So board of directors will approve the financial statement, specified directors, CEO, CFO, CS will sign it as applicable, auditor's report will be attached, we will be disclosing annual report return link, board meeting, DRS, so auditor reported fraud, so audit qualification, loan guarantees, investment, dividend, risk management, material changes, right, and board evaluation. Fine. That's it for this particular class. Now in the next class we are going to talk about the different sections in your chapter 9, where we are going to talk about from section 135 to 138. okay, so this will be covered in the next class. That's it for the day. I hope you like the lecture, so you can like the button, press the like button, you can hype the lecture, you can comment on the lecture, you can join our Telegram, you can also download RBI Academy application, where you are going to get a lot of free resources, just like our free classes, also our paid batches. Okay, so that's it for the day. Thank you so much. Bye bye, take care everybody, and good night.